afternoon from Los Angeles. It's Alyssa Corum and Ed Carson here with a look at the stock market today. And on today's show, we're going to be taking a look at Match Group, Mimecast, and Alibaba. But first, let's talk about the major indexes. So we closed lower across the board, but the three major indexes finishing down just about 0.1% apiece, closing off of lows.
Yeah, it's pretty nice. I mean, the NASDAQ actually found support at the 10-day line, which is a pretty aggressive line. Things going pretty well. Growth stocks did well. I mean, banks sold off on Goldman today. There are some other names. Marijuana stocks had a bad day. But, you know, the growth names, I think the IBD Innovator 50, that was up 0.2, 0.3. A nice, solid day. There really wasn't any damage in any individual names, you know, that offhand.
So growth stocks still looking pretty good.
Yeah.
And we are nearing that 8,000 level for the NASDAQ, that round number, psychological level, and approaching the highs. The uptrend is still holding strong.
Looking pretty good so far.
All right, and speaking of stocks to watch, we want to take a look at Match Group, which broke out today. It gained about 5.2% in heavy volume, clearing a cup with handle buy point. This was on our radar, written about in different columns, including our stock of the day. So let's talk about this breakout a little bit. What do you make of the action today?
Well, it was very positive volume because some of the breakouts we've seen, you know, like Apple, Alibaba, not so great. Very strong volume. What's really nice is that we've had this sort of tight action or closer action, more shallow base, after that really deep sort of wild base. I mean, obviously during the market correction, you know, it didn't really work, that breakout, which we sort of knew was a high risk. And we're seeing a lot of bases now of these top stocks. And, you know, maybe they worked, maybe they didn't work, but now they're setting up again in maybe more, you know, optimal situations.
Right. I think it was kind of interesting after last earnings season. We saw a lot of gap ups. We saw a lot of attempted breakouts. And for those that didn't go on big runs after their breakouts, a lot of them did form another base. So now that earnings season is once again upon us, it'll be interesting to see if we can get some more breakouts this time around.
Yeah, it all is working together. All these top stocks getting ready to a breakout as the indexes are near a high, as earnings season. I mean, we don't necessarily have to have a Hollywood ending, but there's a lot of a lot of storylines are coming together.
Yeah, exactly. So a lot on our radar right now, and we also want to take a look at Mimecast. A bit of a similar chart here to the one we just looked at. Mimecast rising about 0.7% in below average volume, but this is not yet a breakout. So Mimecast is climbing up the right side of a base. Yeah,
and it's today's stock of the day. It's very, you know, it's positive action. Again, this one was more of a base on base. It gapped up after earnings last time. You know, it was a pretty wild base. It wasn't 40% deep, but it was still pretty deep.
Right.
You know, and so this one, it's just a little safer on this one if it breaks out. And just cybersecurity has been doing great. A lot of stocks that have run up or in buy zones or also setting up. So
yeah.
That's always positive.
CyberArk, Zscaler, notable runs this year. So if you are looking to get into this space, maybe Mimecast, the next one in the cybersecurity group to break out. We'll have to see. And we also want to update you on Alibaba. We talked about this a bit last week. It cleared a buy point on Friday, but fell below that level today, down about 3% in slightly above average volume here. But if you know our strategies, and you know we've been talking about all of these deep bases and how deep bases are more likely to fail. I mean, that's what we're seeing here so far with Alibaba. It wasn't able to hold above the buy point.
Yeah, it wasn't just great action. I mean, yeah, it's done well, I mean, up until this point, but you know, coming down in above average volume after an average volume breakout, just not a positive sign. I thought you made a really good point about relative strength with Alibaba, you know, over the weekend, you know, but it was just like how it, look how it's declining even in the short term.
That's right. You always want to keep an eye on the relative strength line. That's the blue line on the chart. Measures price performance versus the S&P 500. We like to see the relative strength line at an all-time high, ideally, when a stock breaks out, but at least at a short-term high. So when you're looking at that handle, and the stock is trading at a higher price than it was when the handle started forming, that's a red flag.
And that's a risk you might see with stocks if the market continues to go up. We're going to see stocks clearing buy points that are really laggards, and there's not really a reason to buy a stock that isn't really performing well. It's probably better to get a stock that's setting up again, in a bullish base rather than one that's finally coming along and sort of grudgingly breaking out, but not beating the market.
Yeah, it's still good to be picky. You want to go through your checklist of what you want to look for, and another way that you could buy maybe a stock that's been on a big run is on those pullbacks after a breakout instead of a base per se. And going along with the China theme, we want to take a look at KWEB, which is the China Internet ETF, which fell today about 2.5%. So what do you think that this ETF says about the China sector? What's it showing us?
Well, I mean, the Shanghai Composite also fell around, which is not tied to this, but China stocks were very strong on Friday. China stocks were weak today. I mean, somewhat, this time it's because, now they thought the good news means that the Chinese government won't be benefiting them. But the thing is that there are definitely sector moves. And even things like Alibaba are moving up and down with the sector. You might think, it's so big, nothing can move it. It's just doing its things on its own. It's like, well, not really. It's basically moving, with its sector, with the market. And that's something to pay attention to. When you look at these sector ETFs, it's a good way to play the sector.
Right.
It's still going to be volatile.
Minimizing eliminating that single stock risk.
Still a lot of risk. There's still that up and down moves, but it's also just a good way. Hey, is this sector doing all right? Is it just my stock, or what's going on? No, you can see there's a sector move going on. And there were a lot of China names coming down today.
Exactly. It's always key to look at that bigger perspective to see how not just your stock that you're watching or buying is looking, but also the group. All right, everyone, thank you so much for joining us today, and we hope you check out investors.com for all the latest stock news and analysis. You can, of course, check out all of our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. So follow and subscribe to stay up to date on all the latest. And Ed's on Twitter at IBD_E Carson. Make sure you're following him for some snarky tweets and some puns and stock news.
Some useful things.
Yeah, some investing related stuff. No. All right. Thanks for watching, everyone. We'll see you back here tomorrow.